But let's talk about personal financial success. We have two objectives, and I like to write this out for people. Number one, we need income for today. Because obviously life is not what? Free. So we have to have money coming in to maintain the lifestyle. So every week or two we got to have a check coming in, and then we got to pay some bills, and we keep doing that on the what? Treadmill. But now, one day, you're not going to be able to trade time for money, so you got to have income producing what? Assets. That's anything that you own that makes you money irregardless of you working. Now think about this. I want you to ask yourself this question in the first person. When is the last time I bought something that made me money? Now flip that around. When is the last time you bought something that just cost you money? Yesterday, this morning, last week, all your living what? Life. So now, what's happening to people is they're spending a lot of times buying things that don't make them any money. And they spend their whole lifetime doing that. So think about this. Let's say you have a household income of $5,000 a month, $60,000 a year. Okay, now, many people would call this a great what? Income. Okay, but let's look at this. See, the question now becomes, see, up here, this is where you trade time for money. You either get this from a job or a business. But now, the time is going to come where you don't trade time for money. You get too old, decide you don't want to work, whatever, job fires you. But now here's what happens. You got to figure out how much assets you need down here to replace what? This here. See, that's all we're ever trying to do as a financial prospect. All we're trying to do is have enough income for today, but eventually have enough income coming from assets down here to replace what we got here. Does that make sense? Yeah. So it doesn't matter if you're a doctor, lawyer, school teacher, counselor, whatever you are, mechanic. You're trying to do two things. Number one, have income for today, save some of the income you get here, get down here and build assets, and one day you can retire and see the world and have fun. Is that right? Now, how many people do you know that go through this process and retire and see the world and have fun? Not very many, right? But see, here's the thing. They didn't know something. See, when you don't have vision, you can't see where you're supposed to go. So think about this. You need between 10 and 20 times what you make in a year. People say, well, John, why do I need so much? Well, think about it. Do you ever want to run out of what? Money. You want money all the days of your what? Life. So if you never want to run out of money, you got to have enough assets that pay you enough income that you never have to touch the asset and it continues to pay you forever. That is how wealth is created. Now, if we got a 10% rate of return here, that will give us the same what? $60,000. But now, in order to get a 10% rate of return, you have to do what? Have high financial literacy. Well, that's another problem. In this country, we don't get what is called financial literacy, but we live in a society that's based on what? Business, money, capitalism, and finance. Is that true? But now, go from kindergarten all the way to 12th grade. Was it ever mandated that you take advantage of learning business, money, capitalism, or finances? Good morning, Shirley. Good morning. It wasn't, right? But they taught you how a rhombus worked. They taught you what the pie is, right? How the pie charts and all those things work. Geometry, history, science. All those things are good, but when is the last time you actually applied those things in your life? See, every single day we deal with this, finances, but we don't know anything about it. See, I want you to think about this and remember this all the days of your life. Capitalism only works if 90% of the people are oblivious and have no financial literacy as to how it works. See, that is why 90% of the wealth in this country is controlled by what? 10% of the population. Now think about this. Since we don't have financial literacy, we don't know where to go and get these 10% rates of return. But now, since we don't, we have $1.2 million here that we need, 5% rate of return. That gives us the same, what? $60,000. So either way, we have an income producing asset that has replaced what? Income that we traded time for money for. So now, see, this is all we're ever trying to get done. See, when we say go to school, get a good education, get a good job, work hard, then you penny pinch, save some money in the 401k. This is what they're saying, but they never spelled it out to you. But here is the other problem to this. See, I've probably talked to about 7,000 people about this over the years, about personal financial success. And I have not found 50 people, Shirley, that even knew what I was talking about when I got to them or were even on track to get here. But here's the issue. You have to ask yourself, how much do I have to save on a monthly basis to get to these numbers? For the average person, it's $800 to $1,200 a month. Now, Houston, we have a what? Problem. See, most people, after they pay for taxes, living expenses, all the things that they pay for, how many of them do you know out of 100 that have $800 to $1,000, maybe $1,500 to drop into their retirement account? They don't have it, do they? Because they got the first issue that set them up for a problem here. Now, this one is key. Anybody ever heard of this? It's called what? Taxes. The average person loses 30% of their income to taxes before they ever spend a dime to take care of their family. Now, if somebody's giving you a financial haircut every single time that you get paid, that's going to cause a cash flow shortfall, isn't it? See, obviously you get a paycheck every week, every 2 weeks. Is that correct? Now, are taxes taken out of that check? Now, let me ask you this question. What does taxes do for you? Not much, right? It just come out the check and they're supposed to take care of the country, right? Now, here's the issue with that. You lose $1,500 off the top here. So now you have $3,500 left a month to what? Spend. Well, here's your first issue. See, now I say you are entrapped in a game called capitalism. So what happens is now big business have figured out how to get you into what is called negative cash flow. So here's what happens. Anybody in here ever went out and got a mortgage in their life? Car note. Now let me ask you, did they make your payments based on this number or this number? The gross or the net? See, when you went and got qualified, they want to know how much you what? Make. And then you had to provide what? Check stubs. And then so they knew what you had and did not have, but they made all your payments based on this. Why? Because now, once they use the higher number, they can loan you more what? Money. And when they loan you more money, what happens? They make more interest on the back end. So now, you have bills that are based on money you don't what? Have. Well, you got a serious problem. See, that's not done to you by accident. So I got one for you right now. First of all, would you agree that most people is in this mess here? They have too much going to taxes, too much going to debt, and not enough investing. Would you agree that 90 to 95% of the people that you know are in this mess? They are. So now, here's my other question. Will they ever get up out of this and get to personal financial success? See, it's not designed for them to. This is designed to keep you into what is called negative cash flow. You never build assets and then you work till you what? Die. So now, here is my econ in its simplest form. And we're going to continue with this presentation. The first thing we do to a person is we look right here. We show them how to cut these taxes by 40 to 70% on the current income that they have. Now think about that. Imagine paying 30, 40, 50% less in taxes on your income. Would that help you out? Okay? That might be, on average, $300 to $1,000 a month, depending on the situation. Well, let's go right in the center here. $400 a month. Now, here's what you do. Instead of taking the $400 and putting it into what is called lifestyle, we say let's apply strategy. So now let's take the $400 and add it to your $500 a month car what? Note. Now you make a $900 payment. Will you pay the car off faster? Yes. Absolutely. And now you're paying the car off with whose money? The government's money. So the government will help you clean up the mess that you have created. Now once you got the car note paid off and you got the tax money, now you have $900 to go towards what? Credit cards, student loan debt, mortgages, things of that nature. But now once you're on this system about 8, 9, 10, 12 months, now you have freed up at least $800 to $1,000 to do what? If you wanted to. Drop them into your 401k and build income producing assets. See, imagine being able to save $10,000, $12,000, $15,000 a year every year for the next 15 years with compound interest. You might be looking at $180,000, $200,000, $300,000. See, that's the decision of using strategy as opposed to just making sales. That makes sense? So let's get deep into this presentation about my econ. So what I'm going to do here, I'm going to get rid of this.